Zimbabwe and and actually never bother even using your $100 trillion notes because they are worthless by the time they get delivered. So that's why fiat is bad money, and why Bitcoin, which should take a massive amount of messing about for it to actually be debased. It's technically possible, but you'd have to get 51 or maybe 70% of all the Bitcoin miners to agree that they were going to change the supply limit from 21 million to 100 million, etc., etc., etc. But of course, if you go down into tokens, which are rubbish, yeah, people will happily pay with those. That's what old SBF was doing. Hey, I've got my token. I've got my Sam token. Do you want $20 million of that? I'll buy your company for that. So, okay. Yes, that low end is bad.
According to Clem Chambers, economic damage wrought by COVID-19 disruptions could take a year to wash through, so that markets won't return to bullish conditions until 2024. Chambers, a prolific financial writer and investor with decades of experience. Before going further in this video, make sure to hit the subscribe button for more updates about crypto world. Cryptocurrencies tend to be volatile by nature, far more so compared to stocks. The intrinsic value of cryptocurrencies is a lot more challenging than calculating the worth of standard businesses because of an inadequate understanding of the area. For this reason, I believe it's easier for organizations to build greed and fear in the marketplace. This drives down the price much more and will generate a much bigger decline compared to 20%, which provides companies with a much more than ideal time to purchase. The inflation issue isn't Bitcoin's only problem, though. Competition in the cryptocurrency sphere is looking increasingly fierce. More and more tokens, exchanges, and technologies are improving upon the original Bitcoin idea and striving to make even more efficient forms of digital money.
I don't know if many people have noticed, I'm sure they have, like somebody threw a switch at the beginning of the month. It's like everything's gone boom. Now, that equities have done that. And I think there's two things at work here. In general, I think the debt ceiling is coming up. And that negotiation, of course, it's going to be fraught. It's going to take longer. It's all going to be grandstanding. It's all going to be last minute stuff. And the Treasury, Janet Yellen, have put aside $400 billion of headroom by basically redirecting cash flows that would go into various parts of the government that would, in the normal case, just be spent. And that will give them to June, which is $400 billion. And that's gone into the system because that's like an injection of liquidity. And that is what spiked equities and will have spiked crypto as well, because it's a fizzy asset that is strongly affected by money supply. So if you were one of those dodgy crypto people like FTX, you'd go, well, it's gone down from 60,000 to 40,000. Why don't we just sell all our customers tokens and just have an enormous short position? It'll keep on going down. We'll help it because obviously we'll be selling their tokens as well, won't we, boys and girls? And the price is going to go down, 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 and down. But we'll have a big bag of USDC. And at some point, when we think we're near the bottom, we'll take that stable coin and we'll buy back all those tokens. And when they want them, they can have them. Or maybe only when they want them, we'll buy them back. Now, the SEC knocks on your door and goes, hello, have you been naughty? Have you sold all your clients crypto, have you? You wouldn't have done such a thing, would you? They're going to go, oh, no, buy it all back quickly. Get it all back in the right place. And you're going to go in the market and take your stable coin and turn it all back into tokens. You're going to turn it back into BTC. You're going to turn it back into ETH and all the other tokens as well. I mean, if you look at FTX, what wasn't there? The Bitcoin wasn't there. The Ethereum wasn't there. What was there? Their Mickey Mouse token that was kind of plastering over the whole. Now, if it only takes one major exchange, or one or two or three or even more, to go, oh, whoops, we better close our crypto short out and buy back all those tokens that the customers think they have, but they don't, then you get a short squeeze. And that's what I think you've seen. Because remember, with a centralized exchange, they don't have your tokens. It's an accounting system. You put your tokens in, they say you've got these tokens, you can buy and sell, but nothing's going on. It's just an accountancy system. It's like a fruit machine. And at the end of the day, when you say, can I have my 64 Bitcoin now, please? They say, yeah, sure. And they take 64 Bitcoin coins out of a bag and send them to you. Or go and buy 64 Bitcoins with their stablecoin and send it to you. So it's not actually those coins that it says you've got, you haven't got them. They might not have them. It's just an accountancy system.
Okay. Despite recent rallies in stocks and cryptocurrencies, the Federal Reserve's quantitative tightening will continue and cause a retreat into bearish territory, said Chambers. Perpetual futures native to the crypto market are a solid gauge of investor confidence in Bitcoin. When the contract price is higher than Bitcoin's spot price, long positions pay a fee to short positions. We can say that those who underestimated the risks of investing in cryptocurrency until recently, the collapse of crypto exchange FTX in late 2022 and its domino effect on other firms was a wake-up call. This happened in November 2022, when the supply and profit was as low as 45%. Since then, the supply and profit increased to around 72%, indicating market recovery.
I'm at almost 100% certain that there are exchanges out there covering their short positions in lots of tokens and Bitcoin and Ethereum, because the first thing these people do is they turn their Ethereum into dollars and spend it, or do whatever, hire 500 programmers, or get a nice big office, or get a football stadium with their name on it, or whatever, or buy themselves some Lambos, all those permutations. So, if you're not going to go bust, because in theory you're covered, you're going to want to be not short of the tokens and long all the stable coins. You're going to need to buy them back, because you don't want the SEC coming in and saying, oh, you've commingled funds. You've done something to your depositors. Now we're treating you like banks, by the way. Yeah, we're just making this up as we go along. But now you're a bank. Oh no, you're not a bank. You're a broker. Banks are allowed to do that. I forgot. Yeah, you're a broker, and you're not allowed to do that. They need to be segregated.
Despite recent rallies in stocks and cryptocurrencies, the Federal Reserve's quantitative tightening will continue and cause a retreat into bearish territory, said Chambers. The S&P 500 is up 6.7% since January 1st. Cryptocurrencies have also gained over the same time period, with Bitcoin up 32% and Ether up 31%. Chambers suggested that overconfident market sentiment and recent fiscal stimulus were behind the recent rally. In 2021, the circulating supply was 18.7 million, but with the current inflation rate of 1.8%, which will decrease with every halving event, analysts slate the next one for May 2024.
I don't think that crypto is correlated with the overall economy for sure, and the money supply for sure. I totally agree with that. I don't think they have much interaction with stocks, even though you'll see them moving together. But it's not stocks moving crypto or crypto moving stocks. It's money supply moving crypto and stocks, and that is the big big effect. Now, at some point, the Fed will stop QTing and probably will QE, because it is the method of economic management these days. And when they've got inflation back to, I think when they've got the ratio of debt to GDP back into a sustainable level where they all agree it's not going to run away and kill everybody, then they will stop QT. And, there's a decent a distance away from that. And at the moment, they're hoping to get the deficit down to 700 billion. And when they do, the tightening that will probably all go away then. So maybe the answer is, when debt to GDP, when the fiscal debt is under $1 trillion, that might be the time to start thinking about getting back in.
Cryptocurrencies as a whole, and Bitcoin and Ether in particular, have bounced back a bit in the first part of 2023, sending the crypto versus market capitalization over $1 trillion and prompting some to speculate that the crypto winter is over. According to Clem Chambers, the growth of the money supply overtakes the growth in the supply of Bitcoin. The price of Bitcoin shall increase. Many other cryptocurrencies use the same mechanism to cap supply, as well as can act as a safeguard against inflation. In terms of quantity, there are only 21 million Bitcoins released as specified by the ASCII computer file. Therefore, because of an increase in demand, the value will rise, which might keep up with the market and prevent inflation in the long run. Do you expect these digital assets to perform well in the coming years? Let us know in the comments section below. If you like our content, give this video a big thumbs up and do subscribe to our channel.